June 2026. Korea's main stock index, the KOSPI, drops 10% in a single session. And before US markets even get going, traders on Wall Street are already watching Seoul. Okay, so to understand the crash you have to rewind a few months. Korea had been riding this AI memory wave, HBM chips, data center build-out, all of it, and the KOSPI was actually one of the best performing major indexes in the world. And it wasn't a broad rally, right? It was basically two names, Samsung and SK Hynix, doing the heavy lifting. Together they're roughly half the entire index. So when those two move, the whole country feels it. June 22nd, the KOSPI closes at an all-time high. Same week, regulators sign off on leveraged chip ETFs, funds built to move to or 3 times the daily market. Quick explainer, because this part actually matters for what happens next. So leveraged ETFs don't just track the market, they amplify it. A 2 times fund on a -5% day. You are down roughly 10. 3 times, closer to 15. And if you get a string of bad days, those losses compound in ways most people don't expect. And these weren't broad Korea funds. They were chip ETFs, basically a leveraged bet on Samsung and SK Hynix. Same concentration problem we just talked about, now with leverage stacked on top. Here's the nasty feedback loop. These products rebalance every day to stay at 2x or 3x. When the index falls, the fund has to sell stocks into the decline. That selling pushes prices lower, which forces more selling the next day. A few days later, Korea's Financial Supervisory Service basically admitted it. Approving these products right near the top of a chip bubble was, in their words, a mistake. Next day, June 23rd, the FSS flags those funds as dangerous. The KOSPI immediately sells off 10%. Worst session in years. They actually halt trading for a bit. Samsung and SK Hynix both drop more than 12%. When the two stocks that basically are the index crash together, everything tied to Korea, ETFs, derivatives, regional funds, all gets dragged down at once. And it doesn't stay in Seoul. Same day, the Nasdaq is off 2.2%. US chip names down around 8. The rout crossed the Pacific in hours. So the AI trade didn't die that week. But Korea showed something real. When one country, 2 chip stocks, and leveraged products all line up the wrong way, a local crash can go global before lunch. Subscribe to Tickertales if you want more stories like this.